Good morning, everyone. Whether you realize it or not, the world of currency markets is woven into the fabric of your everyday life. Today, we're diving into currency markets, something that impacts your daily life more than you might think. Every time you check the price of imported goods, plan a vacation, or even fill up your gas tank, currency values are quietly at work behind the scenes. When you travel abroad, you exchange dollars for foreign money. The exchange rate decides how much you get, and even a small change can mean more or less spending money in your pocket. It's not just travelers who are affected. Businesses, students studying overseas, and even online shoppers feel the impact. A strong dollar means your money goes further, making foreign goods and travel cheaper for Americans. But it also affects the price of imported goods on store shelves and the competitiveness of American products overseas. When the dollar is strong, U.S. exports can become more expensive for other countries, which can impact jobs and industries here at home. These rates shift constantly, driven by a complex mix of factors. Economic health, job growth, inflation, and interest rates all play a role. Even rumors or expectations about these factors can send currencies rising or falling in a matter of minutes. Investors chase higher returns, so strong economies and high interest rates attract money, boosting currency values. This global flow of money can create opportunities, but also risks for anyone with international ties. Political stability and world events also shake things up. Elections, trade deals, and even natural disasters can cause sudden swings in currency values, affecting everything from your investments to the cost of your next vacation. Understanding these movements helps you see how global events impact your wallet. When you follow the news, you're also tracking the forces that shape your financial future, often in ways you might not expect. Right now, the US dollar is waiting for big news, while the Australian dollar is making headlines. These shifts can influence everything from the price of imported electronics to the value of your retirement savings. We'll break down what's happening, why it matters, and what it could mean for you, whether you're investing, running a business, planning a trip, or just trying to make your paycheck go further. The price of your morning coffee, your next car, or your job prospects can all be influenced by these shifts. Even small changes in currency values can ripple through the economy and touch your daily routine. So, let's explore how currency markets shape your world, from the global stage right down to your local store and your own bank account. Ready to see how global money moves affect you? Let's get started and discover the hidden connections between world currencies and your everyday life. The US dollar, usually the main player in global markets, is unusually quiet right now. For decades, the dollar has been the world's reserve currency, dominating international trade and finance. But at this moment, it's as if the world's most watched currency has pressed pause, leaving investors and analysts alike wondering what's next. It's trading in a tight range, like a car idling, waiting for a green light. The usual hustle and bustle of currency markets has slowed, and the dollar's movements are barely noticeable, almost as if the market is collectively holding its breath. Both the dollar index and its futures are flat, creating anticipation across global markets. Investors are glued to their screens, watching for any sign of a breakout or a sudden shift in direction. Everyone's waiting for a signal, wondering which way the dollar will move next. The uncertainty is palpable, and even seasoned traders are treading carefully, not wanting to get caught on the wrong side of a sudden move. This pause is all about upcoming U.S. economic data. Reports on jobs, inflation, and consumer spending are just around the corner, and each one has the potential to shake up the market. Traders are holding back, not wanting to make big bets before the news hits. The atmosphere is tense, with many choosing to wait on the sidelines rather than risk a costly mistake. The Federal Reserve, America's central bank, is at the heart of this. Its every word and action is scrutinized, as its decisions set the tone for global financial markets. Its decisions on interest rates ripple through the world, affecting everything from mortgages in the US to investments in Asia and Europe. A single rate change can send shockwaves across continents. Higher rates attract investors, boosting the dollar. Lower rates do the opposite. The stakes are high, and every percentage point matters for global capital flows. The next move depends on the data coming soon. Will the numbers point to a stronger US economy or signal trouble ahead? The answer will shape the dollar's path. As of January 7, 2026, the dollar is in a holding pattern, calm, but everyone knows it won't last. The clock is ticking, and the sense of anticipation is building with every passing hour. This stillness gives other currencies a chance to shine, especially in Asia. With the dollar on pause, traders are turning their attention to markets that are showing more movement and opportunity. While the dollar waits, others are stepping into the spotlight. The global currency stage is shifting, and new leaders are emerging as investors look for the next big story. The next big story? The Australian dollar's surprising surge. Against all odds, the Aussie is gaining strength, drawing attention from traders worldwide. Let's see why the Aussie is suddenly the star. Stay tuned as we dive into what's driving this unexpected rise and what it could mean for global markets. The world is waiting for the U.S. non-farm payrolls report, an event that has the power to move global markets in a matter of seconds. Every month, investors, economists, and policymakers across the globe tune in, eager to see what the numbers reveal about the health of the world's largest economy. This report is one of the most important economic indicators, often called the heartbeat of the U.S. economy. It's a key data point that can influence everything from interest rates to stock prices, and even the value of your savings. The non-farm payrolls report shows how many jobs were added or lost in the U.S. last month, giving a snapshot of economic health. It's not just about numbers, it's about confidence, growth, and the direction the economy is heading. A strong report means a robust economy and could push the Federal Reserve to raise interest rates, making the dollar stronger. Higher rates attract foreign investment, boosting the dollar's value and impacting everything from mortgages to international trade. On the flip side, a weak report signals a slowdown, possibly leading the Fed to hold or even cut rates, which would weaken the dollar. This can make U.S. exports more competitive, but it also raises concerns about economic stability. That's why traders are cautious. No one wants to bet big before the numbers are out. The uncertainty keeps markets on edge, with every trader watching for clues and hints in the days leading up to the release. The jobs report is like the final score in a close game. It sets the tone for currency markets in the weeks ahead. A surprise result can send shockwaves through stocks, bonds, and currencies worldwide. Until Friday's release, the dollar's in limbo. Everyone is waiting to see which way the wind will blow, and the anticipation is building with every passing hour. The stakes are high, and the outcome will ripple worldwide. From Wall Street to Tokyo, London to Sydney, the results will shape decisions and strategies everywhere. Investors, businesses, and even travelers are watching closely. The jobs report affects exchange rates, travel costs, and even the price of goods in your local store. The next move in the dollar depends on this single report. It's a moment of suspense that can change fortunes in an instant. That's why the market is holding its breath. Every tick of the clock brings us closer to answers that could reshape the financial landscape. Let's see what's happening elsewhere while we wait for the big reveal. While the US dollar waits, the Australian dollar, the Aussie, is soaring. It's hit a 15-month high against the US dollar, signaling strong investor confidence. Oddly, this rally came after weaker than expected headline inflation data. But dig deeper. Underlying inflation remains stubbornly high, above the Reserve Bank of Australia's target. That means the RBA is unlikely to cut interest rates soon. High rates attract investors, boosting the Aussie. The market is betting Australia will keep rates high, making its currency more attractive. This is why the Aussie is outperforming, even as headline numbers look soft. Sometimes the details matter more than the headlines. Australia's inflation story is driving its currency. Headline inflation dropped, thanks to lower electricity bills and weak retail spending. But core inflation, stripping out volatile items, remains above 3%, the RBA's comfort zone. Persistent underlying inflation means the RBA can't relax yet. Investors see this as a sign rates will stay high for longer. That's fueling the Aussie's strength. The market's focus is on sticky inflation, not just the headline drop. The fight against rising prices in Australia is far from over. All eyes are now on the Reserve Bank of Australia. Most experts expect the RBA to keep rates steady at 3.6% in February. Persistent inflation leaves little room for cuts, despite softer headline numbers. Some analysts even see a chance of another rate hike if the economy heats up. The expectation: high rates will stick around through 2026. This contrasts with other countries, where rate cuts are on the table. The result? Money flows to Australia, supporting the Aussie dollar. Policy divergence is driving currency moves right now. Currency markets aren't just about numbers, they react to global politics too. The US capture of Venezuela's president and a new oil deal could shake up global oil prices. More Venezuelan oil means lower prices at the pump and could influence inflation worldwide. Meanwhile, tensions between China and Japan are rising, with new export restrictions adding risk. These geopolitical events make investors cautious, limiting gains in Asian currencies. Even with good economic news, political uncertainty keeps markets on edge. That's why, despite a weak US dollar, other Asian currencies aren't rallying harder. Economics and politics are always intertwined in global markets. It's a reminder, headlines can move money as much as data. Let's check in on other Asian currencies. Most are seeing modest gains as the US dollar pauses, but caution prevails. The Japanese yen, a safe haven currency, is getting support from speculation about possible rate hikes and government intervention. The Chinese yuan remains stable, tightly managed by Beijing, and is near its strongest level in years. Other regional currencies are up slightly, but geopolitical jitters keep investors from making big moves. The Australian dollar is the standout, thanks to its strong rate outlook. The yen is gaining on policy shift rumors. The yuan is steady, reflecting government control. Each currency tells its own story, shaped by local policies and global events. Even when the US dollar is quiet, the region's currencies are always in motion. It's a complex, interconnected dance. Let's see what this means for you. So, what does all this mean for you? Currency moves affect the price of goods, your investments, and even your job. A strong Aussie dollar helps Australians buy US goods, but makes their exports pricier for Americans. For US consumers, a strong dollar means cheaper imports. A weak dollar means higher prices. Investors with international holdings see their returns shift as currencies move. Diversifying across countries and currencies can protect your portfolio. The Federal Reserve's rate decisions impact everything from mortgage rates to credit cards. The strength of the dollar shapes American business competitiveness. Today's story, a waiting dollar and a surging Aussie, shows how global forces touch your daily life. By understanding these trends, you can make smarter financial choices. Whether you're shopping, investing, or planning a trip, currency markets matter. Stay informed, and you'll be ready for whatever comes next. The world is connected, and so is your wallet. Thanks for joining us on this global money journey.